What's up, guys? This is Carl. We have a new video today. I just wanted to share with you guys. I want us to look at why do I prefer using range charts instead of using the 5-minute chart. So this is just the settings on your footprint analysis. So right here on my on my screen, I have the 5-minute chart on the left, and I have the range chart on the right. We have an 8 range here, and we have a 5-minute chart over here. Now you can just see, even just right now, there's some differences in the chart formation. You can see this is the day that started here, and this is the day that started here. So the difference with the range chart is, compared to the footprint, is the range chart will close only after eight price points are already covered, or after a range of 8 price points is covered with price. Then we get a new bar that is going to be formed. For example, we see here the bar closed, then we got a buyer that tried to push there. Then when they moved down, they already completed the 8 range, so it closed. So after 8 price points, it will close. But the minute chart is time based. After 5 minutes, when the clock is ticking, the bar will close. So this is just for you to understand how these charts are being formed. Now let's get into the footprints and let's see, because remember, we know that the key elements in order flow is we are looking at price, then the volumes traded, and the rest. But right now here we are only seeing price. You can just see, compare these two prices, they're just the same thing. Okay, now let's go into more details to see how it looks like in the footprint. Okay, again, here we are. So I have my footprint on the left with the 5 minutes, and the one on the right is an 8 range. Now just closely look at this. After 8 price ranges, the market closes. Now there is some disadvantage to this, and there is more disadvantage with the mini chart. Why? Because as we talked about, the key elements in order flow include price and volumes traded. Now here we see the volumes, we see price, but the time confuses. How? Let's say we are coming into an area of resistance, or we are coming into a certain area. Sometimes if you are in a minute chart, price will come, let's say, even if it makes that big pullback, but you'll be waiting for the next candlestick or the next bar to open for you to make a decision. So sometimes it might take a while. You're waiting a while, then the order flow just shifts quickly. But if let's say you want to get to see those moves a little bit early, a little bit quickly, the range chart is perfect for you. For example, I want to show you, let's go and look into, I think yesterday pound was really trending. I want you to see that. Let's go behind and look for a very, very big candlestick. Okay, this one was in the midnight. You can see one candlestick here. It happened within 5 minutes, but we got 2 here from the range chart, because there's a quick shift in prices. Okay, I haven't started talking about the range charts yet, but I'm just gonna talk about it in a short time, in a short while. I just want us to get any big candle. So this is the 2305. So 2305 is pretty much 2305. That's around. Okay, that's around here. Okay, so it's stuck in between. So look at this. Look at it. We get. Where did it go again? Okay, 2305. Here it is. So we get three candles to go short, but on the other side we get how many? We get 1, 2, 3, 4, and the 5th, you see, that's the return candle. Now look at this on the mini chart. Maybe let's say you saw the selling coming in here. You didn't make a decision based on the delta. Then you want to get into the next candle. You get into the next candle. Look at this. They sell on the low of the candle. Then they just extend a little bit, and that's the reversal when they come into the market. Now look at this here on the, now let's assess this in a different way, okay? In the range chart. First, before we had the 5 minute candle on the minute chart, you see buyers were buying, then a new candle formed. Now on the range chart, we have buyers pushing prices. Why? Because the buy is green, although the delta is negative. Looks like there was some kind of an absorption here, because look at all these volumes here. But it's just sellers were accumulating their positions to go short. But buyers drive the move up, we get sellers getting into there. So we had a big seller that got in that high exactly around there, but we can't see it in the minute chart. Look on the range chart how clear it is. It's very, very clear, 100%. We have a big seller getting into the market. Delta goes more negative. The big buyer right there, they got trapped and absorbed. Price doesn't go through. Then look at these sellers. They sell, they push prices down, then the market moves to the other side. Now, look at these quick changes in supply and demand. You can see that in this bar here, when they just extended this bar close here, they extended one price high, open, push prices, they fail. In this candle here, you can make a decision to go short. If you make a decision here to go short, this was around 33.95. Look at this, you're going to make a decision to go short maybe around here in the next bar after this candle. You have missed some of it. Some of the action here, you're already late. So by the time that the price comes to an area where we see it's going to be rejected, look on the minute chart. On the minute chart, it shows you that the candle is still forming, then later on closes within, you see it closed like a doji, because you're not seeing anything here. But also we see a doji. So price, there was nothing here. But look at on the range chart, they short, then here they clearly show you that first we have algo activity there in these two bars here. We have algorithmic activity. It's so easy to see on the range chart. On the minute chart is visible, but it's visible when price is trying to get away from it. It's not visible here when we are making the low. You see, when we're making the low, algo activity, and when we are rejecting it, algo activity again. So range chart, to me, I would say it's easy to see the quick shifts of supply and demand compared to the minute chart, because the minute chart are only time based. So I know many of you have different footprint softwares out there. You know, if you can feel free, just navigate slowly. You'll see for yourself. So for example, this is on another software, but the range, this is a range chart. So the methodology is just the same. It's just for you to understand what type of chart you're using and why should you be using it. So I will highly recommend switching to the range chart rather than sticking to the minute chart. But if you're comfortable with the minute chart and gives you best result, I will just say that's fine with you. Okay? So guys, that was it. Until next time, bye bye and have a nice day. Happy trading.